The political winds are shifting, whispers are growing louder, and on Wall Street, a familiar question is starting to echo. What happens if Donald Trump returns and brings his signature tariffs back with him? It's not just policy talk. It's a potential tremor beneath the stock market. But the real question isn't if there will be impact. It's where will it hit hardest? Which specific US stocks could see more trouble? Forget the broad strokes for a moment. Let's get specific. Because while tariffs sound simple, attacks on imports, their impact ripples through the economy in complex, often unexpected ways. Increased costs for businesses, potential retaliatory tariffs from other nations, disrupted supply chains. It all spells volatility. And some sectors, some companies, are standing much closer to the edge of this potential storm than others. First, consider the obvious targets. Companies heavily reliant on imports, especially from China. Think big box retailers. Their business model often hinges on sourcing affordable goods overseas. Potential Trump tariffs could mean squeezed profit margins or higher prices for consumers, potentially hitting sales. Which giants in this space have the most exposure? That's a critical question investors need to start asking now. Then there's the automotive sector. It's a complex global web. Tariffs on imported cars or crucial imported parts could significantly raise production costs for US automakers, even those assembling domestically. Remember the steel and aluminum tariffs? The auto industry felt that pinch. Could history repeat itself, or even escalate, impacting major automotive stocks? What about tech? This is where it gets intricate. Many US tech companies rely on global supply chains, often involving manufacturing or components from Asia. While some diversification has occurred, significant tariffs could disrupt production, inflate costs for everything from smartphones to servers, and potentially trigger retaliatory measures impacting US tech exports. Which specific tech stocks have the most entangled supply chains? And let's not forget sectors potentially facing direct import duties based on past rhetoric. Think solar panels and certain renewable energy components, where import competition is fierce. Potential tariffs here could drastically alter the competitive landscape and profitability for specific US companies in the green energy space. Similarly, industries like steel and aluminum could find themselves back in the tariff spotlight, creating winners and losers within the materials sector. The ripple effect is key here. It's not just about the company paying the initial tariff. It's about their suppliers, their customers, and the overall economic impact. Higher costs can dampen consumer spending, which affects a vast array of stocks. Uncertainty itself can stall business investment. So, while the headlines might shout about trade wars, the real story for investors lies deeper.